Running, just waiting for YouTube to appear. Okay, YouTube should appear about now. Yep, YouTube is up and running. Mic test 1 2 3 3 2 1. I think that's all fine. Okay, welcome to another. Sorry, microphone too close. Another live 1 hour session on ETH or breakfast trading. My name is Moby, and I'll just run you through some disclaimers and then just get to me. General disclosure: all Bookmap Limited materials, information, and uh, presentations are for educational purposes only and should not be considered specific investment nor advice. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Okay, I think we're just on auto slides for that one, so I will just let that run. Just a very brief recap about me. I have traded for quite a while. I trade in a discretionary and an algorithmic fashion. From a discretionary perspective, I mainly use Wyckoff, which does include supply and demand, but I also use volume profile. Algorithmically, I have a bunch of algos, indicators, etc. I have a bunch of free ones on TradingView, which anybody is free to check out whenever you want. Okay, let me get rid of that and let us bring up the live ES session. Okay, that's going to be there. I'm trialing some technology today, so bear with me during this hour whilst I try it. So I've got a little app here to switch between tabs during my presentation. I've also got a drawing tablet, so this should be fun when I actually draw on Bookmap with a pen. But anyway, I am not the best artist, but I thought it would be a better representation of the action inside Bookmap and in my presentation than just through a mouse. A mouse is ridiculously hard to write words, for example. Anyway, yep, that's the ES as it is. You've got this strange little iceberg that they're pushing up or helping to lure action towards the high liquidity above. Anyway, we're not going to focus on live pricing action just for a little while. We're going to go through a presentation instead. And this one I have named Planning for ETH Trading. What I'd like to do is to talk about the process of putting yourself into a position that you are ready to take trades to do the absolute best that you can by having a process that is designed to maximize your performance, or rather the performance of the setups that you've designated as having a real probability of a return over R. Okay, so if I go through the elements, I posted this in the Discord a good few hours ago, but we're going to go through each of these bullet points. We don't necessarily have to go through the whole session today, or the whole of each of these bullet points today, but we can continue another time. Okay, I will stop there for a second and just mention that I can see comments in YouTube and Discord, and I believe everything is working correctly tonight, so feel free to hold on 1 second. I do think there we go. Let me just check that is showing correctly. I just didn't think the whole screen was in the frame. Anyway, I think that is now definitely in frame. So if anybody has any comments, please feel free to post them and I will pause and answer them. And good morning, Tom. I'm actually going to mention a couple of blunt thoughts I have on profile, which will probably distance myself from some of yours. But anyway, I'll let you listen to them in due course. Anyway, here we go. First of all, sound mind and body. This is the first step, and like anybody would tell you, if you're not in the right frame of mind, whether it's mind or body, you should not be trading. Okay, my first go at drawing. Let's see if this works. Come on. Yep. Right. So let us just draw somebody here. This is probably the worst drawing you've ever seen. So in terms of mind, we have a little bubble with a few waves in, and in terms of body, we have some shoes with terrible laces. Okay, what do I mean by the right physical and mental shape to trade? I have looked at a lot of this. I mean, I think there's an awful lot on the internet and lots of courses about how this can impact your edge. I believe it has some impact on your edge. I don't believe it's a total determining factor, but you should take care of yourself so that you can maximize your own performance. By the mental state, I'm talking about meditation, breathing exercises, whatever it takes to get you calm in the head. So whatever it takes to be calm like that. Physical. For me personally, I get my mental peace from the physical side of things. So I'm a former triathlete, so I still run, cycle, and swim. So if I go for a cycle ride or I go for a run, apart from tiring me out, which it has done a little bit today, it puts me into a pretty good shape so that it removes excess aggression, shall I say, and is more likely to make me calm. Anyway, let's ditch that drawing for a second. Okay, then the next step, let me see. Okay, already that drawing tablet is annoying me a little bit. Okay, your trading plan. This is something that Tom has said, and I do recommend you go and read some of the stuff that is pinned in his Discord room, Trading Tom B. You need a trading plan. If you don't have a trading plan, stop. Go and write one. I found, because I've done lots of iterations of trading plans, the best way to write a trading plan is to go through granular form. This app here is a note-taking app. It's called Obsidian, but I'm very happy in a future presentation to go through the whole concept of journaling. But the reason I mention it is because this is in a Zettelkasten format, or basically granular bits and bobs. And one way I'd recommend of doing your trading plan is doing it in granular jigsaw pieces and then putting them all together later. In other words, if you have a mental block about doing a massive trading plan, despite having various formats, templates, etc., do it in pieces, do it in sections. If today you are able to write about the process for a setup, write that. If you're able to write the process for triggers tomorrow, write that. If you're able to write the process another day for the reasons why you're doing this, your risk processes, your capital, your emergencies, etc., do all of those on different days if the whole thing is a mental block to you. Anyway, that is another topic, and I'm happy to get into it, but that's just to state the bleeding obvious that a trading plan is absolutely essential. So the trading plan should cover your process and should definitely cover your setups. And one that we've mentioned in the last few webinars, which is the test of the supply and demand zone. And I'm just going to draw it again here, just for the hell of it, just to practice drawing for you. Okay, so, whoops. I have to draw a little bit more slowly, it seems. Okay, here you've got a supply zone. Price then goes down. Then price comes back up. A test of a supply zone can be a test right to here. It can be a test right to here. It can be a test where it fails to break out, it just goes above it, and then it comes straight back down. So you can have A, B, I think it's C. Yeah, I think it's because I was using one of my fingers on the touchpad affecting the drawing, so apologies for that. Okay, so in other words, what I'm trying to say is that the test of a supply and demand zone is, in some eyes, three completely separate setups. I group them all together because I cannot tell in advance where they're likely to reverse, if they are likely to reverse. It could be at A, it could be at B, it could be at C, and it does not matter. And one of the reasons why this is a Bookmap webinar is because I use Bookmap to increase the probability that we'll find out whether it's likely to be A, B, or C. Anyway, let me get rid of that drawing, another terrible drawing. Okay, All right. Okay. The very next thing is to review yesterday's action, especially the afternoon. And here I'm actually not going to draw, or I will draw a little bit on the profile. So what I mean by that, if we take yesterday's ETH action, again, I'm just checking to make sure there's no more comments. Here we have yesterday's RTH just in white here, and I can always color them so I mentioned previously, all the grey ones are ETH and all the white ones are RTH. I trade more in ETH than I do in RTH, so the grey ones are important to me, so I'll often have all of those visible just to remind me what crazy stuff can happen in ETH. And one thing I would like to mention, is that in ETH especially, or probably just as much as in RTH, um, um, what they will do is absolutely test your resolve. They will play games with you. They'll push it much further than you can possibly think. Um, and and that's why being able to look back on some crazy previous ETH sessions can be useful. Okay, and we're going to go through what happened at the London Open a little bit later, so we can look at how far they can stretch things before they go on the path that you might have expected them to. Okay, so if we then pop this out so we can see what happened. Sorry, I should actually just reset that. I meant to do it for RTH. Okay, I'll just answer a question from Tom. Tom, what graphics application I'm using? Okay, this is Epic Pen Pro. I bought it when it first came out, so it cost me $12 US. I think they have now moved on to this whole concept of software as a service, in other words, a monthly sub, which I don't really like. So that's Epic Pen Pro, and I'm using a drawing pad or digital tablet in this presentation to draw terrible stick images, and that is an Uji S1060, basically a 10-inch drawing pad, which comes with its own pen. And that's simply so I can write words as well as draw on Bookmap. Okay. Anyway, let us look at the RTH action here. The bars here are the 30-minute bars. You can see that the action yesterday was a V-shaped reversal or a total reversal. And if I go right down into the bars and I squint, I can see roughly when the 11 o'clock, 11:30 reversal was, and it was basically one time framing, which is, in other words, straight up after that. Okay, and if we did drag back the 3-minute bars, and we could see exactly the same thing. So if you look at the top right of the screen, you can see that the reversal was right on 11 o'clock, 11 a.m., and we had a total reversal. We also had some good economic news about the trade deficit not being as bad as previously thought. So, the point to note from our review of the RTH session was that it ended on a strong note. There was good economic news, and if we just remove that, if we look at the type of profile, and this is where we'll draw again. Okay. So if we look at the type of profile here, okay, I think I've got to make sure my other fingers do not touch the drawing pad, otherwise it does not work. Okay, and we move over to here, we get the same kind of top. Let me see if I can just drag one out from earlier. Let me see if I can. I just want to contrast how these things can end. I'm going to have to get rid of that because we've moved that. Let me get rid of the evening profiles. Okay. Right. I just want to contrast the way that the last two RTHs, and I'm just going to draw again. So in the review of the ETH, in the review of the Come on. There we go. That one and this one. I will reduce the thickness of that thing because it's too thick. Get that down to there. Okay, they are essentially fat or poor highs, and if you contrast that with, let's make this one blue. If you contrast that with this one, that is a little bit of the opposite. So when I'm talking about poor, I'm talking about a large amount of trades towards the top and a more balanced or extreme thinner ending on that one over there. Okay, so the point of this review is you want to see whether the previous day, the RTH session, had that kind of fat profile extreme. And the logic behind that is that if it did, and you have some bullish action going into it, there is an increased probability that it will take out the high of the day during the ETH session. And if we go back onto that, and we have a look, let me just get rid of those. So you have this fat one just here and this fat one just here. I know they're perfect examples, and again, please ignore any perfect examples that I ever give, but they just did happen to be taken out the next day. This one, the probability is increased because you have some very bullish news and a V-shaped reversal, which often continues into the Asian session after that RTH session. So anyway, that is one thing that we do. Okay, let's go back to the presentation. Okay, the last major swing, high and low, we can do that actually in, if we scrunch this up and drag this around. So what do I mean by that? I mean the last major low and the last major high of the afternoon session. Every time I use the mouse wheel, we lose what I'm drawing. But what I tend to do is look at the afternoon session. So I will look at something from around about here to there. But because you've got quite a large range, and because we finished quite close to that high, I'd be more interested in the high, certainly for the Asian session. After the Asian session, you'd probably have another perspective on it because you'd be able to take into account the action during the Asian session. Okay, I'm just going to stop and just see if there's any questions. No, absolutely no questions today. Okay. All right. So yeah, so one of the things that you do is mark where the relevant highs and lows are. So those two levels there would have been of interest to me. And then the next thing that you do, and I actually have enough data in Bookmap today, I made sure I did, was that you then scroll back and you get into that afternoon session. Let me just drag all the way back here. Not quite sure why it is not letting me go a bit further. Okay. Then one of the other things that you would do is look at what action happened at that high by way of what large trades, and we're talking about really, really large trades, happened around about there. So you've got a trade of about 533. We can zoom right in and break it down to smaller trades, but essentially there were a couple of trades, a 286 and a 250, so basically over 500 traded at that level there, which was about 4521.5. And the reason why we look at that is because they love to retest. They love to retest where large trades happened. And because we're talking about one of our setups being the retest of supply and demand, that has a lot of relevance to what we do. Okay, well, let's just go back to the presentation. Okay, so we've looked at the price action. We've seen it's bullish. We've seen that we have a poor high that's likely to be taken out. We've marked on yesterday's high and low, and we also look at the settlement. We've got a proxy for settlement here, which is this purple line at about 4518.50. And the reason that I mentioned, and I've mentioned that in the previous webinars, is that they love to come and tag home. This is considered the home level because that's where the RTH session finished. So again, it doesn't happen every day. It can not happen for several days in a row, but one thing that they do like to do is to come back and tag home. Okay, so yeah, so we've looked at the afternoon session, we've looked at the price action, we've looked at the profile, we've noted where the last swing highs and lows are, we've noted where yesterday's high and low are, and we've noted where settlement is, and we've looked through the profile, and we've looked through the large trades. So yeah, we've done quite a bit on that. And then the next thing we do is look through the economic release and earnings. So we're doing a recap of yesterday's RTH, and one of the things that I do find useful just in terms of brief snippets of information are some of the recaps of the major news from the session. So one of the services I use is Financial Juice, which you've seen before on this webinar. I'm also subscribed to various free newsletters. Services like Substack are quite useful if you don't want your inbox being absolutely clogged. But the idea there is you scan through just to see what the overall sentiment of the economic news and the news affecting the largest companies was during the RTH session, and anything that came up towards the end of that afternoon, or like last week, we had big earnings releases of the big techs after the close, things like that. So all of that type of information is absolutely key knowledge to have in the ETH session. Okay. Then obviously you look at the economic releases earnings for ETH and RTH. For Asia, obviously it's Japan and China. So you're looking at things like the Chinese manufacturing, the PMIs, Japan interest rates, anything like that, anything major that's marked as red by your economics news provider. Forex Factory is a free one that we have a screenshot of. Let me dig it out. Okay. And let me. Okay, yeah, for example, you can see the color coding of the Forex Factory. I think most of the traders that listen to this podcast, because I tend to go into quite a bit of detail, would already know about this, but basically we're looking at the economic releases that are marked red by the news provider. So the ones that are going to have a major or significant impact on volatility during the ETH session. Okay, and also, what's obviously on the horizon for the next RTH session and the breakfast economic releases. I mean, with this one, we were lucky enough to be around for non-farm payrolls on Friday. A lot of the times, the biggest US economic releases are at 8:30 Eastern or 7:30 Central. So they will happen in this breakfast webinar session. That is still an ETH trading session. For me, the ETH trading session really does encompass from 6 o'clock Eastern right through till 9:30 a.m. the next morning. So all of that is encompassed, and that 8:30 economic release can be sometimes the only action that can be worth trading on a really, really dull day. Okay, let me just close up some of these so we can move down a bit. I'm just going to see if there's any questions. Nope, no questions at all. Yeah, just checking to make sure we have some people on board. Yeah, we do have some people. Okay, right. So we have done that, and we have done that. Relative volume. Okay, I mentioned the sheep index previously, and I'll go through it a little bit more slowly, or I'll speak more slowly on that. So the whole concept there is of relative volume over the last X days. At the moment, I'm looking at the last 10 trading days, and I'm just about to draw again. So I haven't drawn for a few minutes, and I'm practicing. Okay, right. Okay, so the sheep index, I mean, if we take the volume in ES over the entire session, but as on a cumulative basis. So if the session starts at 1800 or 6 p.m. Eastern, let me just draw a line like that, and then the volume might be like that for every hour, etc. And so the relative volume, the cumulative volume goes up like that. Um, what we are doing is seeing whether the volume is comparable to the average volume over the last 10 days. Sorry, the reason why I drew that is because it can go up and down. All right. And I also wanted to explain why this was lagging. I calculate mine on a 1 or 3 minute basis, so it's adding up the volume traded in ES over the last 1 or 3 minutes, and then added up for every 1 or 3 minute period from 1800 onwards, right till the end of the RTH session at 4:30 Eastern. The idea is that at 1800, this is always going to be zero. And so you might well get massive volume here, but you are well under, say the average was there, you might be well under the average at that moment in time. And then you get a big spike in volume and suddenly you're above the average. So it's just something to bear in mind that if you look at relative volume, it is lagging and it is never going to lead the volatility, but it does have value. And another terrible drawing, let me just get rid of it. The reason why it has value is if early on in a session you get to 150%, it's going to be a percentile the way I calculate it. So 100% is going to be, it'll match the average relative volume at that time of the day on a cumulative basis vis-a-vis the last 10 days or 15 days, whatever you want to measure against. And I will actually just show you what it is right now. So if I put that there, right, the relative volume right this second is 67%. Okay, right. If that percentage was after a big earnings release like the Apple release last week, it was somewhere around about 200% straight off the bat, just after the Asian Open. You're going to get a lot of volatility. You can turn on that part of your trading plan that allows for smaller setups or smaller trades, like scalps or semi-scalps or micro swings, because you're going to get more of those if that's what you wanted to trade. If that relative volume there was around about 35-40%, then it's dull. You're not going to get much volatility, or you're not likely to get much volatility, and certainly would not be worth, in my opinion, to do any scalping. Again, I do trade from swings to micro swings to tiny scalps as well. Anybody that trades NQ will know that you can often have a trade that will either take you out or take you straight to the main target within a few seconds. So when we're talking about scalping for NQ, it's a little bit like swing trading for ES. Okay, but if it's in the region of well over 100%, you've got good volatility, and that you may well have trading setups that appear that are worth taking an hour's worth of risk on. Okay, I'm just going to stop and just check for questions. No more questions. All right. Okay. Okay, let me just pull up an image here for a second. Okay, next image. Yep, okay. I'm just checking on the YouTube screen that appears. Okay, correlated markets. Okay, we discussed earlier the likelihood for bullish action in the Asian session. Here it's appeared on the YouTube now. Okay, yeah, as I've mentioned previously, I do look at the indices, the Asian indices during Asia, the European indices during Europe as the best form of correlation. When I say I look at correlated markets, I am not expecting and I do not believe that they will necessarily lead NASDAQ or ES. But if I step back and have a look at them, they often give me an idea as to whether those markets are in value or are exploring value, i.e. trending. And the reason why I put up this picture of gold and the US dollar DXY is we had look at that picture. Yep. In fact, no, is not necessarily. Yep, it is. Okay, you've got gold shooting upwards, and you've got the USD shooting downwards. Okay, over the last year or so, we've had a high inverse correlation between the value of the US dollar and the Nasdaq, for example. And the US dollar is inversely correlated to gold. Well, it has been for years and years and years. So currently, that correlation still holds. So if you have that kind of action there where it's clearly trending down, and I'll put clearly inverted commas, but clearly in my eyes, suggesting that the US dollar is going down, that adds weight to your bullish views on ES. So that's the reason why I might have those on my screens, somewhere on my screens, again, not in a prominent area, but somewhere on my screens during the Asian session, and the US dollar probably throughout the day. But gold, I'm not a big gold trader. I did used to trade it because it is active in the Asian session, but I don't trade it as much anymore. Okay, let me get rid of that image. Okay. All right, and with the indices, I think I previously showed you, and I will point this out as well. I showed you that I'm using a free indicator, the Chris Moody high, low, open, close. It's completely free, the version that I'm using, and I'm just using that as a proxy on the indices in TradingView, whether it's ES, NQ, or DAX, Nikkei, whatever, to show yesterday's high, low, and close. That's the only reason why it is there. So if, again, I'm in the top right of the screen here, if I zoom out, you can see yesterday's high there, yesterday's low there, and yesterday's close, i.e. the proxy for settlement there. And I have that on all my indices. And the reason why is that, as I mentioned previously, the ES and the NQ might like to tag home during the course of the ETH session, and the same logically applies to the other indices which would have closed at a different time of the day from the ES and NQ. The DAX, for example, will close at around about 11:30, I think it is, in summertime. So yeah, it's something that I will have on my screens as the German markets open, just to know where its settlement and its high and its low is and where we are in relation to yesterday's range. And as I mentioned previously, sort of what do other, what were the other big tech companies doing? We're in a quasi AI bubble, and I mentioned that in the first one of these webinars I did with Bruce a couple of weeks ago. So whatever the main five do, the rest of the market tends to look at. very closely or follow very closely. So I will look at any major price action in the Apples, Amazons, Microsoft, Nvidias of the world. Okay. All right. Okay. We will get back onto live price action and reviewing ETH action in a second. Again, I'm just going to pause just to see if there's any questions. No. Okay, times of the day. Again, this is something I've mentioned, and it's just worth mentioning again here when we're doing a recap of the planning. You should do your own research and statistical analysis of the times of day that the ETH session has historically been volatile and is likely to do so again in the future. Again, past volatility is no guarantee of future volatility at that time of day, but again, logically speaking, if you have a lot of volatility at the London Open, that is one of the times of day that you might expect really good volatile action. Okay, so the times that I've mentioned previously, the opening times for each of the indices markets, and also the close of the Asian markets. So yeah, those kind of times. But again, do your own research, find the times, see if they fit in with the times that you are available to trade yourself. Statistics with a typo. So let's get rid of the typo. Get rid of that. Okay, yeah. I am a big user and researcher. I think it goes hand in hand with algorithmic trading. Statistics to me are where you can find potential sources of future edge. But in terms of your plan, one of the statistics that I always look at every day is the sub-session range statistics, just to know what what we could be up for. And again, this is partly to cure bad habits, and we all get into bad habits when we trade. It'll partly be an emotional thing, unless you're completely as cold as stone, that you will need to sort out for yourself. Okay, and one of the ways that I find that sub-session statistics, and by that I mean the average session range for each of ES and NQ for particular time slots or time ranges during the ETH session. So the Asian time slot, the European, the breakfast, just to see what the average ranges are. Again, I have those on my screen, so I know I can know immediately that if I look at the ES range right now, the ES ETH range today is 21 points. Oh, is that 21 points or 21 ticks? Let me see. Yes. Yes, sorry, 21 points, and that the average over the last 10 trading sessions has been 29 points. So it's just something to know. It's especially useful, I find, at the beginning of that subsession. So, again, for example, the NASDAQ European average at the moment is 104 points. So if you were to say, for example, to fade an opening move higher, and we're going to go and look at this now in Bookmap, and you did not put a stop on, or you placed a very wide stop, you should know that that 104 point range could be right from the open, and it could be right upwards. So you could, if you faded it and the range has only been 10 points so far, you could suddenly find yourself on average 90 points down, which could break your account. So again, that's just something to have a look at. And with that in mind, let's go and have a quick look at how the NASDAQ opened the London session. This is directly relating to those range statistics. So if we go back to the 3 a.m., just going to zoom out again. Almost there. Okay. And if I wind this back here, okay, so we're talking, let me just get the pen out again and draw on this. So we're talking about this open here, which was a vertical open where it went straight up, and this action in Bookmap where it went straight up. Okay, if you've got some range statistics that it could be over 100 points on average, and you've got relative volume for the day of over 100%, it wasn't in this case, as I mentioned earlier, it was only about 60%, and you decide to, so you look at this action here and you decide you want to fade it, whether it's there or just a little bit later there for whatever reason. These aren't real setups, this is just me hypothesizing. You are in potential danger of being 90 points down or 100 points down if you do not place a stop. And a stop, as I said previously, what I believe in is having equal dollar value risk for each and every trade that you take. So for example, if you were trading $200 or $250 per trade, if you had a stop, you're $200 or you're $250 down. If you do not have a stop, that action can go against you a very, very long way at that London Open, and it's just something to bear in mind that they will play games and they will try and break people for whatever reason or for no reason at all during the volatile periods of ETH. And the fact that it is thinner, i.e. the liquidity is much less than in RTH, enables them or helps them do just that. Let me just remove that. Okay. And where were we? We were back on this presentation. Okay. Right. Yeah. Now we are really into the Bookmaps things. I just wanted to go through that just to keep everybody abreast that trading in ETH is not just taking trades just off the bat, as I'd say. There is still a lot of preparation and a lot of research that goes into it, and it is something which involves just as much process as your prep for the RTH. Okay, all right. Let us, again, we're going to zoom right back. So the final thing, which is very much a Bookmap specific thing, is looking where the liquidity is and the resting liquidity especially. I mentioned that we tend to discount these round numbers at 50s and the hundreds. But I mean, even though this is really zoomed out, you can see from an early on in the session perspective that the liquidity in ES was above. And if we actually zoom right into that, it becomes a lot more apparent. So if you're looking at it, again, you probably zoom in a little bit more. That kind of action, say for example at 10 p.m. New York time, or in fact even earlier, as we opened up into the Japan Open, which is really around about that period, and later the China Open, all that liquidity was above. So my perspective on this is that if the liquidity is clearly one-sided and it also directly corresponds with the kind of action that you're expecting, in other words, bullish for the reasons that we discussed earlier, and you have liquidity above and you're quite away from it, that is going to add to the confluence for long potential setups to get you towards that liquidity. In other words, it's going to act as a magnet. Okay, and I always look at ES and NQ liquidity together. So on my screens, these are in separate windows. They're not in tabs, so I can see them side by side. And I'll see, sometimes the liquidity will be clearer in NQ, sometimes it'll be clearer in ES, sometimes it's unclear in both, and sometimes it's clear in both. And if we have a look at the open, it was much clearer in ES. So even if we zoom out a little bit and look at the action, you had that resting liquidity up here, at about 15,363 that got taken out quite early in the Japanese open session. But you also had this liquidity below, and it turned out that was not relevant for that Asian session. No, it was just a game that they were playing, but they were trying to actually draw people upwards. It was much cleaner and much clearer to see that from the ES that we just looked at. Okay, so that's 45 minutes. Again, not a question. Ah, here we go. There is a question. Aidan, no, I don't know. I don't know, Aidan. No, if you're in WA, yeah, feel free, get in touch, and we can always have a chat or coffee or whatever. Yeah, the answer is no. I don't know whether there is such a community. Okay. All right, let's get back on some live action, and so we can have some live analysis, because this is what I always try and do during the 1 hour. I know that I took up 3/4 of the hour today on planning and preparation, but it is so important, in my personal opinion, to do that. Anyway, let's have a quick look at what has happened. Okay, so first of all, we will just zoom out for ES. This is the ETH session. So we had that bullish perspective. We blasted higher at the London Open, had a pullback to VWAP. VWAP is the black line there. Then we took out the London Open high, had various failed breakouts, or an attempt at a failed breakout, 3 separate little spikes higher, and then we moved back down through VWAP, and we're back in value. So this dark gray area I've mentioned previously is one standard deviation from value, and it's just a proxy or an approximation of value, but we're within value. And if we had a look at just get rid of the, where are we here? We are just above yesterday's high, but we're in value for this session, and value, roughly speaking, is that area there. Okay, so we're in really nothing land at the moment, so we'll have a quick zoom out. We can see some clear bands of liquidity above, which may attract us later. There is we had a look at the economic release, and we're well past 2030, and there's been no major volatility in this session. So at the moment, the clearest thing we're seeing from the overview of the heat map is the liquidity above in ES. And if we switch across to NQ and just zoom backwards a little bit just to see if anything has been resting at any interesting level, you've got this level here at 15,360, which has been around for a long time, but they've added, subtracted. So when it's not static, or when it's not even relatively static, I discount it. I don't pay as much attention to it as if that had been solid. If, for example, that had been completely solid all the way through, say, from the Japan Open, or from mid-morning Japan time, which is about 10:30, 11 their time, and it stayed that completely static all the way through, then you'd have it as some kind of potential tag area during RTH or the end of ETH. I mean, since we are approaching the end of ETH now. Again, it does not predict in any way what may happen first. In other words, the market may go up 200 points first, but it's just a potential tag area that you keep in the back of your mind. It does not take you, I mean, for example, if you have this strong liquidity below that you believe is a magnet, it should not stop you taking good longs that are in accordance with the setups that are in your trading plan. But if you happen to get into a short later, and you happen to have a scale out plan, and you could keep a runner that is one potential target that liquidity can then be. Okay, one of the other things that we tend to look at on these little micro swings are unfinished auctions below and above. It's a small one in, let's just drag this down in NQ. You can see that there are sellers and buyers at that level, but it's such a small amount of volume that we tend to disregard that. And on ES, how are we going? Now, on this little scene here, there's no unfinished auctions. We're just trading in value between two liquidity zones and inside the day's value. We are above settlement, which has not been tagged, and we're not that far from it. I'm just having a look. I've got a level here, something again that I mentioned in my planning process. This is now an old level, but it's worth mentioning just in terms of how you plan for things. I mentioned about 30 minutes ago, whenever it was, about that large trade. It was actually about 500 in Sierra. That to me was a 435 trade. So I marked it in Sierra, and it automatically appears in this custom notes column. I basically wrote a little script inside Sierra so that it magically appears here within the next 60 seconds. Just something that I find useful. Just so that, if you are not trading directly in Bookmap and using Bookmap for analysis, then the platform that you are trading in, to have some direct interface with Bookmap is useful. And for me, I find that the Bookmap API and also this Cloud Notes feature is really good. So it was relatively simple to write that script. Okay. Just looking at the largest levels on it. There's nothing huge here. So there's nothing that really stands out. So you have this level which has stayed at a decent amount all day, but in old ES terms, that's peanuts. Even if that is actually 179, it is 179. That is nothing to the levels that we used to have for liquidity at individual price points. There's one thing I actually had in my presentation for planning that I didn't properly cover, so I'll just mention it now. And again, it is really important for ETH, which is an objective measure of the current volatility and liquidity. So I just mentioned, for example, what I thought of that 179 down there, or whether has it gone down to 183? It appears now. I think it is worth having tools, whether you buy them yourself or you develop them yourself, that you can measure the volatility in the market and also the liquidity. The liquidity will not be lagging, but the volatility by its nature will be lagging because volatility will be measured over a past period of time. But just to know, if you're measuring volatility on a very small time frame, to be able to see it really pick up. So something again that I can read off I can read straight off my charts. I can tell you that the average liquidity by the objective reference that I have for ES is 78 and for NQ is 7.8, so it's like 10-fold difference. And the volatility in NQ is 20.5 and the current volatility in ES is 4.8, and that's in terms of ticks over a very short period of time. It's just something that can be useful, so that if it's something that you observe from time to time, and again you can have checklists of things that you check every hour or half hour, or maybe it's just ingrained into your subconscious. It's just something that you can see that volatility is picked up or not. And that can also play out directly in your trading setups and your risk setups. So, one of the things that maybe we should get into in a future session is how you set your stops for the setups that you take. Whether you have fixed stops, whether you have volatility-based stops. And again, my personal preference is to make sure that the risk that I take is equal dollar value every single time. But if you have an objective measure of volatility, it is a factor or a formula or a calculation that can be used in determining a volatility-based stop. One of the reasons why I mention a volatility-based stop is because it reconciles, or it equates to our vision that we cannot predict the future. In other words, if you in the ETH session for ES, you always have a 2-point stop, or because that's what you've been good at, or that's how your setup is for ETH. That is ignoring the current volatility that might be in place, and that is just relying on your belief rather than a total objective view, or maybe anyway, nothing that anybody else says can be concrete in trading, but it's just an opinion. There are things in Bookmap that can give us potential very, very, very tight stops that we're clearly wrong behind. For example, if we were positioning a stop behind this heavy band of liquidity, that might be a liquidity-based stop, but you can also have volatility-based stops. And I do believe that if you occasionally, you don't have to use them all the time, but if you do occasionally switch over to volatility-based stops, you are accepting that you cannot predict the future. And just because you think it's definitely going to hit this stop here, wherever here was, whenever you say that out loud to yourself, you are telling yourself you can predict the future, which goes against every rule of successful trading, in my opinion. We cannot predict the future, and every single trade that we take has to be necessarily a 50-50 proposition, even though 20 of the same trades may have a completely different probability. It's just every individual trade is its own bet, gamble, whatever you want to call it, with a 50-50 probability. Okay, I'm going to just stop there because I think there's another question. Okay, Bound, I've used Sierra charts for a long time, so I have I've written quite a lot of stuff in that, and they've got a language where you can actually write scripts, formula, whatever, without knowing too much programming, or you can delve into the magic world of C++, which I do program in. I program in that. I also program in PineScript for TradingView, and occasionally in Python as well, because Python's a good interface. For example, in Python, you can interface directly with Bookmap, so you can code your own indicators or whatever, your own interfaces into Bookmap. And when the interface to Market Pulse is, I think, officially released open, I will be looking at using Python to script a couple of things in Market Pulse that I'd love to see with the microscopic data or the microscopic snapshots of data that Bookmap does. The way that the Bookmap, if you zoom right in, it's every microsecond or whatever, and Market Pulse you can set down to 10 milliseconds, 20 milliseconds, 50 milliseconds, whatever snapshots you want for your calculation. So you can look at lots and lots of things. The commonly available ones are things like price change and volume pressure, which is just there and there. But there are also other things like book pressure, which would be quite interesting to code inside Market Pulse. Anyway, I think I am getting towards the end of the hour, so I'll wrap it up there and just ask for any final questions. We've got a few people in Discord, and I think we've got a few people in YouTube as well. I hope that was not too generic. Again, I'm happy to cover popular topics, directly related to setups as well, like the supply and demand concept and the overlap with volume profile. I'm happy to, just to dig into that more week upon week. But anyway, feel free to post comments about what you'd like this to cover. But I will call it a day. So thank you for watching.